Travis, today we're diving into an issue that's making waves on Capitol Hill again. The SALT deduction, or also known as the state and local tax deduction.
Here we go again.
Yeah,
Yep.
acronyms. Right now, there's a $10,000 cap on federal deductions for state and local taxes. Something that's been a major point of contention since it was introduced back in 2017.
Yep.
The cap is set to expire here at the end of this year unless Congress acts.
Well, there's no worries then.
Yeah, this will be easy.
Given their reputation.
I'm sure they'll get this done. But this week, House Republicans are pushing for a big change, though. They've proposed raising this deduction, or this cap, to $30,000 for taxpayers earning $400,000 or less.
Okay.
This could mean serious savings for millions of people, especially in high tax states. But there are big questions about who's going to benefit from this, what are going to be the costs, and whether or not this can actually pass, since there's such a slim...
Yeah, I mean, the SALT deduction, just backing up here, Stephen, the SALT deduction allows taxpayers, if you itemize your deductions, right, to take deductions on their federal return, and they can deduct things like local taxes. The big one that most people think of, though, is property taxes.
Right.
Here, right? So if
Especially
you
here,
so if you itemize your deductions, you can write off those property taxes, state and local taxes to a cap of $10,000.
Yep.
And that limits, as you pointed out, man, it's been a major sticking point for lawmakers, particularly from high tax states like California and New York, and they've been pushing hard to raise it. Obviously you would too for your constituents.
Absolutely.
Considering the taxes in your
job.
state. But the House Republican majority is really slim, right? Kind of hanging by a thread. So those lawmakers from those other states could have real leverage in shaping what happens next here. Something's probably going to get done. We don't know what the final form is going to look like, especially coming out of Congress, but something's probably going to get done here.
Yeah, Travis. So let's talk about what an increase in the SALT cap means for people. It means higher deductions. You could deduct up to $30,000 in state and local taxes, lowering your taxable income on your federal return. We're going to have bigger benefits. Those who pay substantial state income and property taxes are going to benefit, or they're going to benefit the largest from this.
Think of like someone living in San Francisco with the high price of their property and then the state income tax. Of course they're going to push for this.
Yeah, absolutely. And then finally, this may make itemizing more favorable for people as well.
Yeah, versus the standard deduction that the majority of people use now, right?
That's correct.
So if you typically make more, or not make more, if you typically pay more than $10,000 in state and local taxes, obviously this change and move up could mean meaningful tax savings for you, because you get to deduct a larger portion of those payments on your federal taxable income. But as a lot of people are, anytime you start changing tax laws, Steve, if you're unsure about it, definitely reach out to your to your tax advisor here, or just your wealth advisor, and they can connect you with a tax advisor probably. Because tax laws can be complex, and personalized guidance for your specific situation here is going to be paramount, because you want to make the most of your deductions and keep the most money in your pockets and keep it out of the government's here, right?
That's right. Absolutely. Travis, has been great. I look forward to it next week.
Look forward to it as well.